Today's top picks from Reuters Breaking Views. All talk, no action in China, where reform could turn out to be the most overused word this year. And foreign investors in Saudi should pay close attention to the risks. With me is Peter Larson. Let's start with the China story. So you're holding up Greece, Spain and Russia as three countries that China should aspire to here. Because, and let me just put this into context, because voters hold leaders to account.
Well, and creditors.
We think.
Creditors as well.
Surely you don't believe that of Russia.
Well, there seems to be, it's starting from a very low base, but there does actually seem to be some, there's some protests, and they actually have elections, which admittedly they rig, but at least, they have to rig them.
I'm only saying that just to keep this theme going. I always give Reuters Breaking Views a hard time about their views on Russia. I don't think you've ever written a positive piece about Russia, Rich. Anyway,
yes,
that's for another day.
That may well be the case. But the interesting thing about China is, first of all, everybody talks about reform. What does reform mean? It can mean a variety of things. It can mean, introducing democracy, overhauling the legal system, liberalizing the financial system, or it can mean increasing petrol prices, which is what they did yesterday, or Wang Yang, who's this rising political star, who's talked about reform being that there should be less sort of required applause for politicians at sort of official functions and things like that. So, it can mean all kinds of things. But if you talk about the important reforms that are needed, then the chances of them happening look quite slim, according to John Foley. And the reason for that, ironically, is that the lack of a democratic system and the lack of external creditors is the other point, actually make those kind of economic and political reforms quite difficult to achieve because they create losers. Now, the interesting thing I think about China is that people in the West you quite often hear the view in the West, oh well, isn't it great, China? Look, they take a decision to do something, they get things done, they don't have to worry about constitutions and kind of electorates and pressure groups and so forth. But I think. And that's true, but it reaches a certain limit. And when you get to a point where your business is relying on a proper legal system, enforcement of contracts, copyright protection and so forth, the prevention of corruption, when those pieces aren't in place, it puts a brake on the ability of the economy to continue. So we think these reforms are necessary, but it looks like it will need a bigger crisis for them to happen.
Okay. The other story I want to look at, Yuna Galani's piece on the equity market in Saudi Arabia, which has done incredibly well of late. But your warning is this is a market known for volatility. It's a market that has a tendency to disappoint. So beware.
Yeah. It seems to be being pumped up by a couple of things. First of all, there is the oil price. There is also this enormous stimulus that Saudi Arabia did last year to try and sort of prevent an Arab Spring from rolling over into Saudi Arabia. 130 billion they pumped into the economy. So that's pumping up the market. It's at sort of post-Lehman highs. And there seems to be foreign money flowing in. Not a huge amount. I think we're talking about $400 million came in last month. It's a $400 billion stock market. But foreign investors seem to be sort of tempted to get in. But yeah, as you say, there are serious concerns. The oil price and what might happen with Iran is obviously the biggest sort of geopolitical issue.
And this market is up. What? Well, some of these statistics here. $400 billion, the stock market, but record net purchases.
But from a very small base.
$400
million. Yeah. And the other interesting thing, of course, is foreign investors, you can't actually go in and buy the equities. You have to do it through sort of swaps engineered by banks, which means actually you're buying shares, but you don't actually get any real ownership rights that would come with shares. And the assumption sort of seems to be that will all sort itself out at some point. But that's another risk for foreign purchases. They don't actually have that much direct control over what they're buying.
Okay, Peter, many thanks for that. Peter Larson. If you want to watch our US Breaking Views show, that comes on every day, 12:30 Eastern, 16:30 GMT. Of course, you can pick that up on the Breaking Views website on demand and Reuters.com on demand. I'm Axel Threlfall. This is Reuters.